Hey guys, how are you? Yep, so this is going to be the first of 3 promised videos. Many people tell me, hey, it's tough to find the capital to join a specialist group of traders doing a specialist method, etc. And I get that. I remember when any form of education that I spent always felt like capital going out of my potential trading account. But that was often a trading account that was going down all the time. So it was actually decreasing capital in my early experiences and even deeper into my intermediate experiences. And in fact, if I'd spent more on education earlier and traded smaller, I think I would have progressed quicker. But that's all by the by. And there's good and there's bad education as well. Part of what you have to do is critical thinking on all that is being put to you and eliminate. Anyway, let's not get too philosophical and big level. The big trade. So what I've agreed essentially to do is I'm giving 3 trades that I think are really good, that are going to be super macro. They're going to tie into a bit of a reset stroke. In this case, I would call a currency crisis, particularly with an Asian element to it and a trade war element to it. And I'm not just talking about USD China. I'm talking, in fact, even about South Korea and Japan. And this trade is going to be the USD against the Korean won. Now, it's arguable, as I actually happen to see strength of the yen coming through against the dollar, that in fact the Korean won against the yen may in some instances be as good, possibly better, or in a supernatural way, may not get the spike, the blow-off spike that the USD will get, but could be stronger earlier. Problem here is it's a very exotic pair. Already the Korean won is exotic on its own. So I'll be talking primarily about the USD Korean won. I'll also talk about the USD JPY. USD is mainly in this because it's the base currency of the world, and it's kind of part of the trade war with China, which is definitely an element to this. We're seeing a number of things going down. We've got real problems in Hong Kong. This is not a fundamental trade, but I'm going to sew some of the narrative in with this. Real problems going on with Hong Kong that's escalating. They've closed the airport at the moment due to disruptions. It's big. Those people are not in any hurry to be incorporated into communist China, and the fear is they will not get what they want. They will be subsumed at some point. There's a trade war, and let's switch to an article between South Korea and Japan, which many of you will not be aware of. South Korea moves to downgrade Japan trade ties and seeks talks. Terms of Trade is a newsletter that untangles a world embroidered in trade wars. Sign up here. Okay, well, we won't be signing up, but we'll give you the highs and lows of this. Generally, you'll see this article. South Korea moved to downgrade Japan from its list of most trusted trading partners, while also seeking talks to end a month-long spat that has hurt economic ties between the 2 American allies. So that's where we're at. South Korea plans to split its fast track category, which typically Japan's been part of, into 2. Initially put Japan only in the 2nd tier of that fast track, so out of most favored nation status. So the president there demanded last week Japan reconsider its decision regarding moving South Korea from its list of white nations. I don't choose the colors, that's their choice. Considered safe enough to export strategic materials to. So that's one Asian nation to another, talking about white lists and not so white, gray or black lists, I'm assuming, for strategic materials. Now, the interesting part about this is that actually Japan is, as ever, the best exporter in most instances, particularly in that part of the world. Although South Korea does export, you'll think of Samsung and many other things, Kia vehicles, for example, Hyundai, various other big conglomerates that do their stuff. But it's important to point out that South Korea runs a trade deficit with Japan in 2018, and it was the biggest among more than 250 trade partners. that they have a trade deficit with. So South Korea buys in from Japan. So that's an interesting article which I can leave in the program notes for you to muse upon. And let's go back to our Korean won and the trade. So the idea here is I'm giving you something we've gestated in our community rather well. This is our FX commodities segment. I actually had one of our Korean students do this particular one, alumni, and actually involved in giving some of the webinars that we have in our community. And you'll be able to see that actually we split it in many different time frames, and you can see a little bit about how it operates. So we put up a setup and we look at this across all time frames. Why is this an interesting trade? It's an interesting trade because there is a super macro element to this. This is a monthly chart that we look at, and when you can see through the setup that we're actually drilling down right the way through monthly all the way through to the current moment. So let me just get big picture view in here, go monthly and zoom it out, get a little bit more history. Now you'll see I've done quite a bit of work on here and we're applying our method. Don't think by looking at that you'll be able to get it all clear, because there's some things that don't apply and some things that do, and you need to know the rules and the reasons for this in far greater detail, and it has evolved immensely from some of my earlier YouTubes that I did. But just looking at this chart, I want to give you a historical aspect to this. So let's draw and pull the screen a little nearer, Francis. Let's do this so that we can do some drawing and scribbling. And I've got a better pen now for doing exactly that. I'll even tilt it up a little bit, and let's show you a little bit about this technically. So there was a great Asian crisis, and that occurred around 97 into 98, and tapped out sort of the cusp of 98 as it came. So you might notice that if I draw quickly, and I will grab a pen first for that, and let's go with the red, that this period over here we had very low volatility. You can see compression here technically, very low volatility, and then we had that little beginning of a move, and then we took out that level, we took out that level, and you had an absolute moonshoot up to 1920. That means $1. So we're looking, just to be clear, at the base currency of the dollar against the South Korean won. We had an absolute moonshoot. You've got to remember that down here you were in and around the 760 to 800 level, never to be seen again. And that was roughly where you were squeezing out before you began your break. This was a huge overperformance to the target HVF that was generated by this. Now, you're not going to get many brokers to find this. You might need IG index, spread bettors, which are everywhere but the States, I think, largely. You might, and I'm repeating on here, say get interactive brokers that's in the States side that will do it for you, the USD Korean won. You can also use plus 500 as well if you're lacking brokers to do it. This trade will be worth that, in my opinion. So essentially we've had a squeezing, and then we had this melt up. Now, South Korea, as I've already said, has some great companies, but they're kind of in a difficult position. I don't know what the news is going to be. Is it going to be trade war with Japan, China, trade war with the dollar and the Chinese, the yuan, the renminbi, the Hong Kong dollar, and that escalation all playing out? Are we about to get an Asian spring, but in a financial currency context? The disruptions and the dislocations of all the manipulations of currency markets. This is something I'm calling for. I think it's going to commence in the next 3 months. I think it's already actually begun breaking already, in fact. And the idea is you will potentially get a move that could see you get a gain well through the 2,100. In other words, taking out this high with potential overperformance. Let me take my lines off and just reframe this so that we get enough of the magic of this potential move in screen. So you can see some of my workings in here, and if I do this, you'll see that the overall performance, what I'm illustrating over here, the overall performance of this trade in terms of risk reward If I just look at that as a risk reward function and broaden it out so that everybody can see the numbers written in there. It's just hidden. It's a bit of a bummer. Yeah. No, if I remember correctly, it was around 7.64. Well, you actually had about 3 or 4 times that in overshoot. This is called overperformance. So you get such a squeeze for such a lengthy period. The actual overperformance you ended up getting gave you a 70 plus 0.54 over there. You'll have to take it from me. It's just under the number. I'll see if that will also come out if I lengthen it. No, they're going to double it up. It's annoying the way they hide that stuff. 70 plus. So it's a really big overperformance. So there's likelihood and potential for a super spike to this. What am I calling for and looking for in this trade? Let's leave him up there. 2,108. 2,108. We haven't got as tight as we did here. There was a lovely 3 rising method. We haven't got as tight. This has got a fatter funnel, as we call it. You're going to get a H3 and an L3 there. All of these were in falling wedges, which imply and suggested the next major move up. Falling wedge, next major move up. So you can see the key periods and the events of the financial history. Basically, you're seeing economic financial history. This was the Asian crisis itself. This was specifically about the reason that these currencies ran. That was the Asian crisis. Starting here up to 98, where it then started to calm down and came back down. That was your trade. That was your low volatility to high volatility trade. What we've now got is not quite as big a squeeze, although I will be showing you on lower time frames that in actual fact, if you were part of our community, you could have potentially have got in a lot sooner, a lot earlier, and already be in the green. But that's why we're looking to give you potentially a great trade that can help you do that. 2,108 could be superseded, is the key point from this study, by some degree. Now, I wouldn't necessarily anticipate that you're going to get a 3.5 going on 4x overperformance as you did in this instance here. And it's a fool's errand to try sell the absolute top on something like that. When you see the parabolic nature and the skipping of the currency, you will know that there is big moves occurring, and it would be wise to sell into, reduce your position size as your P&L numbers go insane. And I'm taking a good chunky position in this, and I'm looking towards it, and I think fundamentally all the key points are there for this to occur. So I would expect a target performance and maybe conservatively 30 to 50% more at the top of a super spike. If we were exceedingly violent in our reactions, it's not beyond the realms of possibility that we see 3,000. So I'll clear those beautiful drawings that are now out of place. It's not beyond the realms of possibility that on a super spike we could see approaching 3,000. But that would be pretty intense. You can see how far away that is. Remember, for an on-target performance, we would be in and around here. That would recommend be about a 2x. I certainly wouldn't hold out for that, and I would ad hoc trade any area above the 2,108 as a generous gift area. Already, we're talking about a currency when we were first over here. Let me just get rid of that. You can see the level when you were first breaking what we refer a primer, 1125s. You're already at 12s, 1125s. It's almost a halvening call of this currency to go to 2,100. On the yen, it may be more, although we have no structure and we probably don't have decent brokerage platforms for this to play out. So I would expect to see the institutions maybe exploiting that trade if they were well trained on HVF method, or if they have the inside skinny on the pressures that would be building there. So let's talk about that. So what's the game? Well, let's drop it down and have a look at the particular structure of this pattern right here and now. You can see we're leaning upwards, and you can see the scale of these moves when there are big events. I mentioned the Asian crisis of 98. I, of course, didn't mention how they were hammered by 2008. So let's go back to our drawing tool and highlight 2008, 2007. So this was the beginning. This was 2007, and then Lehman's and the dollar-based pump. It was also pretty exceptional, taking you from 920 lows up to 1600. Again, you're talking almost a 2x, almost, not quite. Move is just less than 2x, but very, very strong. So what we actually have is we have our 3 impulse structure that we look for with this move over here. Now 14, 15, not as high, not as big. So this was subprime. This was Asia crisis. This affected the Thai baht. So the interesting thing is, to what extent will these other currencies be affected by this? It could be, you know, is it going to be a Southeast Asia against USD, or is this going to be the big reset? Remember, this Asian crisis has just been big enough to give us our first impulse. This was subprime. That was just big enough to give us what we call our second impulse. And then since here down into the 2016 China blow-off debt highs that then saw the Korean won get a bid again and come back down. This is our third impulse, and that was the beginning of the gold move off its lows. So this all ties into financial reset. So the actual thing we are trading is the triggering event, which we'll take across as being proven and as having occurred at roughly the 1-240s levels. Although we've got in a lot tighter on lower time frames. Remember, I'm showing you this now in the weekly time frame. This particular trade is actually the great reset. We are trading the reset sniper. This is the reset sniper for currencies. Trade. This is going to have knock-on effects of the scale that will make that look small. In other words, the move will be bigger than that, and it will be proportionate to potentially bigger than the entire Asian crisis was for the Korean won. Remember, this was a big deal for the Korean won. So the next move that comes on is going to be at, I would say, proportionate to the Asian crisis move, or larger, because it will be globalized even more. The Asian crisis, to some in Europe, caused a sort of a slowdown and hiccups, but it wasn't fundamental to Europe, wasn't particularly fundamental to America, although it had a global effect. It was, you know, it's like a very big earthquake in a place some distance away from you. It's obviously a big event, but the degree to which your effect, you got the ripple, you got the aftershock, it was uncomfortable, but you weren't killed by it. This could be the reset sniper. This could be the global repositioning of the financial order that you are trading here. In other words, the potential for super spike can't be understated either. You know, we think this is big. Well, just change the framing of your chart. Change the framing of your chart. You know, who knows? And I'm not a fan of the dollar for strength, but if you did get sort of dollar milkshake type theory, you've got to recognize that this pattern on the monthly time frame is far more violent and spiky than the one that preceded it. This setup that saw the original Asian crisis started, you know, you could argue it was starting in the beginning of the 80s, and had an up move, second move, went real low, 3 rising method there for your H3L3 HVF break, and we would have been in on it right there from 96, and you would have been a 2-year FX melt up. From the beginning of 96, you would have closed the trade end of 97. That's a heck of a period to hold a trade, and you would have absolutely killed it. with the leverage that's available. Now this pattern is a lot smaller in actual fact in terms of its impulses than the one we're now looking at. So if we just look at this and the structure of this, it is almost like a crypto pattern for those that trade the cryptos. You will have seen the equivalent of BCH. We traded a BCH moonshoot in the bulls for alts in the 2017 period. That was very similar structure to this. So this is an FX doing a crypto setup. But unlike crypto, where this thing is set up in 8 months, even on a big setup like BCH had, or 3 months or 4 months, you are talking about proper dog years event that is setting up from essentially 96 when we first had the pump to today, which is 2020. So you're talking about a 24-year economic setup for what is probably going to be the technical trading event of the reset, the great financial reset. It'll be a different world with different rules when we come out of it. I'm not saying they'll all be in place, but the plan to, you know, the IMF, the SDR, who knows, all the solutions, inverted commas, will be being rolled out during that period. So this is going to be a big trade. So for those of you that are saying, well, what is it? What is a trade? The trade, as far as I'm concerned, is only really officially confirmed, although we've got in early. And let's drop it back down through the weekly, because we were analyzing that, and go back to where I was. It's only really confirmed when we clear this high point here. This high point was the apex of the Chinese debt crisis. Remember, Korea, neighbors, etc., affected by that. Largely different Chinese tribes and families, Korea and all of these areas. Let's have a look. You're at the 1244.3. 1244.3 is the official triggering of the macro pattern. You may, if you come to the conclusion like we have, that this is the beginning of the move and that we will continue to work our way up. Not to say without pullbacks, please note. Not to say without pullbacks, please note. But that in due course we will be making the big break, and this will be broken impulsively when it triggers there. So if I were to just put that back on, essentially your third impulse has been a falling wedge. You could have actually taken the break of the falling wedge there had you wanted to be early. We've been observing this pair for a while. You got a squeeze, you could have taken it there. Key level of 1130. That was interesting. It was kind of a neckline for a head and shoulders over here that never was. And this is where I assess we are now. Now, it's quite possible that there'll be further pullbacks prior to running here. So you're going to have to finesse this entry. If you get in too big and you blow it, you won't make the money you need. You need to be able to wear the losses of any potential pullback. Chasing in now, it's possible we're going to get a little bit of a pullback here. My guesstimation, if you want a few leans, is that you shouldn't get back below the 1175. We have a money management sheet. You should have one too. We plug that into your stop. So put a stop in and around that red level. So let me write this down for you. 1175, and this is not a recommendation. This is me talking about trades that I will do and continue to add from here. What you elect to do is your own business. So there's the red tab. Whoops, let's choose the pen again. We should not see that level again, but it's not impossible that they put the genie back in the bottle. In short, the official stop for the overall macro setup is way down here, but I'm not interested in wearing a loss down to 1054. The risk there, the amount available for loss, is too high. 1176 would see you holding on there, and maybe you look to collect anywhere around this zone here from 12.10 to there. Now it might not do that, and you may have to force your entry if you start getting too close to the official break 12.44. If you are uncomfortable with getting in early and want to just hang on the outside until the official break, which should happen impulsively, meaning fast and quickly, wait until 12.44.30 is run, or have a buy stop order there, and then you're going to have to determine where your stop loss is. Typically this should be impulsively, and it's unlikely that you'll be back, but you can do what we call a break and feign and come back into the funnel. So again, position sizing and stop loss, do your mathematics, do an Excel sheet. We have one in our community which is specific for HVF method. You need to learn a lot more about HVF method to be able to implement this correctly. So it won't be of use to you, and of course it's premium product. So look out for that 124. Where was that target? Take 50% off is my suggestion if I was you, or what I will do, rather, let me say it like that, 2108, 50% off. So stop, reward, and then discretionally close. This could be 60 as well, 50 to 60. If you're a more nervous disposition, make it 60 for your reward stroke target. That is target 2,108. That is stop 1,176, and that's your trigger. So 1244 trigger, stop loss 1176. I would use this if you get in early on any pullbacks between the 1204 range. I'll put square brackets 1204, 1210 or 12, anywhere between there. That's not very neat. .04 or 12, and target 2,108. If this is to happen, you will have participated in a 40% plus move in a currency. Most don't. You need to be patient, you need to hold and watch the news. Don't trade your P&L, don't watch the money being accumulated. You're likely to want to tinker with it and mess with it. Only time you start removing is after that target is run. Don't snatch a 6:1 risk reward when a 30, a 40 is available. We will be pinching that we will actually look to get entries that could in fact be well over 100. That's something I'm engineering with my guys in the community. This trade, without you risking too much, worth you risking say $1,000, could or should potentially return anywhere between 10 and 20. Okay. But you might have to make multiple entries. So don't put the $1,000 on your first entries. It could be you'll chase the pump, and that's just as a pullback comes, you'll be shaken out of the trade and you'll watch it happen and you won't make the money and you won't be able to join us. So execution is everything. Execution. Lots of small entries. Lots of small entries. Little example might be like this. Yeah, didn't take a screenshot. Thought I had. Pretty sure I had. In fact, I know I have. 1 second. An example of it would be like this image I will show you, which is out of one of my platforms, and you can use that as your example. Okay, so there's big stuff coming down. I'm going to be interested. What's the news? I think the trade is probably going to perform. Remember, we can always be wrong with our opinions. I think it's quite probably going to perform, and I think it's quite probably going to be huge, and it's going to make big news, and many people will be shocked by it. And the fact of the matter is, you're seeing potentially the Great Reset taking place, and certainly at least an Asian currency crisis taking place. So how will this all play out? Let's see. That is the first trade of many that I have for you, of 3 that I have for you. The other 2 are equities. This is FX. This is going to be an FX week, by the way. So I will also include with you that I anticipate that I mentioned that I actually expect the yen to be stronger. In fact, that's happening right now. I've been saying it for a long time. If you follow my Twitter feed and in our premium community, we're in on the trade. And in fact, there is structure for sub 88.8. No one tells you that. Kyle Bass and all these guys telling you yen was supposed to go to 300. Actually, in times of great fear, the yen is the currency to have. The yen is the currency to have. Sub 88.8 if you want. And in fact, if you look at this right now, it's actually getting very close again to our triggering point, which is that rejection spike over there. Very big pattern. It's taken a long time to form. These are very reliable. And that looks like it's about a pea off the roof, which I call the convex and then vertical drop type view that you get. Man peeing off the roof. Okay, all right, that's it. You've actually got the USD JPY thrown in as well. You've got a trigger there. I will give that trigger to you for when it's confirmed as being a runner in terms of our structure. I'd expect it to break impulsively. It might break and snap back. So that's the low over here. That's on data from FXCM, by the way. So the low there was 104.656. You're at 105.173. Now we've been on this trade since God knows when. We were drawing this rising wedge up top here and talking about the break and entry at 111.5. We've watched it crossing what we call a very fat funnel already, and it hasn't even started the official break yet. Okay, that's it. You've got 2 trades, but the one that I'm talking about, do you want to be somebody who said, I won? Yes, you could be. Terrible joke, terrible pun. But anyway, go and check it out for yourself. Not a recommendation, just stuff that we're doing, and I'm sharing a little bit with you. Hope you found that helpful and useful. Remember, you can lose more than you have in your accounts if you do not do your position sizing. Have an understanding of your loss. If you have to test it with a micro lot and see, or ask or Google, do it. Do not lose on a winning trade. It is possible. Do not lose, and that will be sizing errors that will do it to you. Okay, bye, and thank you very much for watching. Catch you later.